Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Ira Tadia. One stock that we have been looking at pretty closely now is a Wonderla Holidays, and this is on the back of the approvals that they have received for the new amusement park in Tamil Nadu. Joining us on the show to discuss more is Arun Chittilappilly, Managing Director at Wonderla Holidays. Arun, good afternoon and welcome to the show, and congratulations on the approval.
Thank you so much for having me on the show. Pleasure to be here.
Always a pleasure to speak to you. Arun, if you could help us understand uh, at what stage are we now that the government approvals have come in Tamil Nadu, and what's going to be the plan ahead?
All the approvals for us to start construction in Tamil Nadu has already been approved. We've obtained it. We've already actually started work on it as of Wednesday. We broke ground and all the construction is starting in full swing. We hope to finish it in about couple of, within 2 years. The internal goal for us is to be able to open it by July 25. So that's the goal that we set ourselves.
Right. And what's the kind of investments that you're looking at with regards to this project? And when do you see it breaking even?
So this is a large amusement park project. In fact, it will be one of our biggest projects. So we are looking at between 400 to 450 crore kind of investment. Little less than 500 crore is a number that we have in mind. And we are expecting to hit about 1 million plus footfalls every year in this park within the first 2 to 3 years. So if that happens, we will break even definitely in our first year itself. Even if we don't hit 1 million visitors, we will be comfortably EBITDA positive. That's the hope. At a PAT level, we will be profitable from the third or fourth year.
Okay. And overall, when you talk about the other one where construction is on with the new Odisha Park as well, how is that progressing?
That's going very fast for us, and we actually started last March the construction, so we are well halfway into it. We hope to be ready by next year. June next year is the plan to open this park. Another 8 to 10 months, we should be ready to.
Okay. And again, taking these into consideration, what's the kind of revenue addition you're expecting? Because clearly, so far, if you see till the first quarter, you're doing almost about 150 to 200 odd crores on a quarterly basis. How does it pan going ahead?
See, for us, a large park should contribute between 80 to 120 crores. First year we are expecting between 75 to 80 crores kind of revenue. The small park we will be expecting maybe 40 to 50 crore kind of revenue. So that's the pretty much the estimation that we've done for this. And now we'll have to wait and see how it really plans out. But based on our calculations, based on past experience of our parks, this is how we come across it. Yes.
Okay. And again, from a ARPU perspective and footfall perspective, where are you seeing higher traction from a footfall sense? And if you talk about the ARPU as well, where do you see it at the end of the year? Where do you plan to average it?
Yeah, current ARPU is roughly about 1,600 rupees, if I'm not mistaken. So that will continue. We will make sure that we maintain ARPUs. But having said that, during Q3, when our school seasons come into play, when discounted tickets come into play, our ARPUs will drop a little bit, but that's to be expected. But our ARPUs have been stronger this year for us, and we expect that to continue going forward as well. Like for example, every year we take about um, a 5 to 10% increase in ticket prices, and this year also we will be doing that. It's also a function of the number of attractions or new attractions that we add to the parks. So that also is happening across all our existing and new parks. So we should be able to do price hikes every year. Yes.
Okay. And overall, if you see in terms of, even if you have to look at the kind of traction you're getting, now between online bookings and offline bookings, are you seeing things wherein online bookings are increasing?
Yes, we get almost 30% of our bookings through online bookings. This was nothing. This was only 5% pre-COVID. So it's moved from 5 to 30% of bookings coming through online. So that's a good sign for us. It gives us a lot of headroom to figure out forecast demand and also better prepare ourselves for busy days and things like that. So that's a conscious decision that we have done. We are also in the middle of a digital transformation. We want to, look at improving our tech capability for bookings and CRM and things like that. So that's an ongoing process.
Okay. Now, clearly, overall, FY23 has been a landmark year for the company. I mean, you've seen record-breaking achievements, highest EPS ever. I think 130% growth, if I'm not mistaken, is what we saw versus a earlier peak EPS which we had seen in FY20. And this has been accompanied by a high footfall revenue, EBITDA, as well as PAT. If you have to look at the coming years, how easy is it going to be for you to break FY23 record?
Well, we should be able to break that record this year. I mean, that's what we feel internally. We should do better than last year in all metrics. And I think we are well on our way to do that as well. But again, this is the first time we are doing a normal year post-COVID. So it's hard for us to predict what kind of numbers we'll be doing. But I think we should do better than last year is our internal targets, which we've given everybody. And they're all hopeful of doing it. And going forward, because we have new projects, coming on stream. For example, next year we will have Orissa come on stream, and the year after that we will have Chennai come on stream. So, because of that, I think we'll be able to maintain revenue growth. Of course, EBITDA and PAT numbers could fluctuate a little bit depending on the depreciation that. Depending on PAT numbers could be hit a little bit going forward when new projects come online. But EBITDA numbers should be strong, and I think we hope to, go from strength to strength.
Right. And from a resort perspective, I think Bangalore, we did see the occupancy go down slightly in the first quarter. But how is the trend looking like? Where are you in terms of the occupancy rates and the average room rates? And secondly, what's the plan with building further resorts?
See, the resorts have done exceedingly well for us during the post-COVID year, which was last year. Like I said, this year is kind of going back to a new normal, and occupancies could be a bit lower, but I think our ARPUs and ARRs will be higher in the resort, and we are trying to make it a more value-added and more premium offering. So that's the effort from the company. We are also in the process of initiating expansion in the resort. We are adding some rooms. So I mean, we are bullish on this because we feel that for our parks, and a resort becomes a nice addition in terms of, for people to extend their stays and stay an extra day. And our parks have become sufficiently large for us to do that. So I think it's going to be a continuing trend for our company. After we do the expansion in Bangalore, we are planning to do a similar project in Hyderabad as well. So, and maybe Cochin and then Chennai. So all the big projects, all the big parks, we want to do a resort adjacent to our parks.
Right. So, Arun, overall, from a capex perspective, one is the maintenance part of it for the existing parks, two is adding new attractions to the existing parks, and three is construction and additions in the new parks as well with the resort. How much would that stand at from here on? How much capex are you looking at in terms of 24 as well as FY25? And what's the funding plan for the same?
So in the next 2 years, we will be spending close to 500 crores for Chennai and Orissa together, which out of which I think about 150 crores has already been spent in the two projects. 100 crores in 110 crores in Chennai and about 40 crores in Orissa has already been spent. We have sufficient cash on books for us to complete these projects without any external help. Going forward also, I think we might take some loans at some point, maybe after 2 to 3 years, when our other new projects come into stream. But to complete our existing projects, we don't need any outside help. Also, maintenance capex is planned into our system, so we roughly spend about 10% of our top line on maintenance capex, which is adding new attractions to existing parks, refurbishments, new restaurants, new F&B. So all that is already being taken care of.
Right. So, Arun, with this, where does the land bank stand at? How much is the current utilization overall? And what's the utilization plan going ahead?
So we have roughly about 350 to between 350 and 400 acres of land with the company. Most of it is freehold land which we own, and except the Bhubaneswar one, which is 50 acres, which is at least. Roughly 50% of that has been utilized. I would say 50%, and the rest of the properties will get used as we expand the park. Like every year when we add new attractions to an existing park or a new park, obviously we will consume more real estate. So for us, it's very prudent that we have sufficient free area so that we can expand our offering as the numbers grow. For example, when we opened our Cochin Park in 2000, the capacity was only 5,000 visitors and the park occupied only 15 acres. But now the park is almost 35, 40 acres in size, and it can accommodate more than 1 million visitors. 1.2 million visitors is what we did last year. So that's a huge growth in the footfall. So for that to happen, obviously we need to keep spare real estate.
Right. And lastly, if you see from a yearly, if you have to see FY24, as you're mentioning, that this will be one of the first years post-pandemic as a full year, what's the kind of growth you are looking at?
See, like I said, we hope to do better than last year, and internally we are confident that we should do between 15 and 25% growth in numbers for this financial year. But in terms of revenues, but the rest we don't know. I mean, it's a wide margin. Like I said, it's hard to say how each season is going to play out and how exactly it's going to play. But having said that, we are bullish and we are seeing strong demand from, especially during festival seasons, which we already started experiencing now with Dasara and everything. And we are quite confident that we will do better than last year.
Right. So I think lots of levers that are in place from here on as well. And the stock itself is seeing some smart moves. Thank you, Arun, so much for joining us on the show and sharing the views so clearly. Good projects that are at play. A land bank which stands at around 350 to 400 odd crores, and majority of it, 50%, little over 50% has already been utilized, and majority of it is pre-owned. In terms of existing projects which are underway, the company has enough cash on the books to support the capex for existing projects, and going ahead, they will look at other options as well for newer projects. And FY24 probably will break records that the company hit in FY24 will break records that were hit in FY23 as well from a financial perspective. So interesting moves coming in on this counter. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BT Prime.